Hi there viewers, welcome back to Market Fatafa. Thanks so much for staying tuned on to ET now. Let's keep it going with the big buzzers in today's trade. Now on the technicals, we are being joined by Sahaj Agarwal, the head of derivatives at Kotak Securities. And we once again have Rabinder and Anshu joining us back on the show from the research team. So good afternoon to all of you. And Sahaj, we'll come to you. Crompton is the stock that you've picked out for. Tell us what the outlook is on the charts, because last 6 months or even on the YTD basis, the stock has been slightly under pressure. Even the last 1 year, it's not done all that much, but it's rather on the positive side. After all of this correction that the stock has recently seen, do you believe it's now time for a jump up on the stock, or do you believe that this consolidation is here to stay for a bit longer?
Yes, hi. First of all, good afternoon to all the viewers, and thank you for having me on the show. Crompton has a very interesting setup. In fact, over the larger term, if you see, the last time that it gave a breakout was around May 2024, and this time around that breakout is acting as a support zone. So we believe from multiple parameters, including the risk reward perspective, the technical setup vis-a-vis the market, as well as on the fundamental side, we believe the stock currently has extremely limited downside, and the upside is open towards the 390 mark. Considering all these positive parameters, we see a strong support at around 295, and on the higher side, an initial target of around 370 followed by 390 is what we would expect the stock to play out. So that's the take on the stock at this point of time.
That's the outlook on Crompton. Let's move on, and Ansh, coming to you for a stock that has some positive news, but the market reaction is slightly negative in tandem with how the market has been trading today. Hero Moto is the one we are talking about. Tell us what the news flow is.
That's right, stock is reacting a bit negative, but in the morning it was trading with a gain of more than 1%. It has actually touched 2-month high level as well. So the company has actually announced the launch of 4 new products: Zoom 110 scooter, Hunk 160R 4V, Extreme 125R, and HF Deluxe motorcycles in partnership with its long-standing distributor Urban Auto in Sri Lanka. Now, Hero MotoCorp has been present in Sri Lanka since 2012 through its trusted distributor partner Urban Auto, and with this move, it is strengthening their presence. The company will support its new product line with a robust sales and service network, reaching over 500 customer touchpoints across country by May 2025. Now, this wide-reaching network will ensure convenient access to genuine spare parts and high-quality after-sales service for customers across Sri Lanka. Also, if you see on chart, then yes, the stock has touched 2-month high, but it is trading slightly in red today.
Okay, so that's the outlook on Hero MotoCorp. Sahaj, Ajanta Pharma is the stock that you've picked out for us. It's an interesting choice because we don't discuss this stock a lot on this show. Last 1 month, it's seen a little bit of a red. 6 months YTD, same story. Last 1 year, however, has been healthy for the stock. What's in room for this stock going ahead, and what are the levels that you're spotting on the charts?
So ideally, in Ajanta Pharma in particular, what we're seeing, there was a downside resistance, trend line that the stock was unable to cross, because of which there was a higher top, higher bottom kind of a structure, and the market is also pretty volatile. But in the recent times, what we're seeing is that the stock has come to challenge that downward resistance trend line, and it's given a breakout. And today overall, actually in the whole market, we've seen some kind of a pullback, and similar movement has been in the stock. We believe there's a, the breakout level is now expected to act as a support, which is placed around 2670. And on the higher side, we believe 2900 is possible over the next few trading sessions. So yes, positively poised. Volume setup is also looking interesting. So I think that's a risk worth taking as a trader.
Okay, so that's the take on Ajanta Pharma. Let's move on. And Ravinder, HAL is the stock that you've picked out for us. I believe it's on the back of a brokerage note. Tell us what the note entails.
Well, as HAL is in focus, where Motilal Oswal has come out with a note on the company, and they have maintained their buy rating with target price of rupees 5,100. They expect that the company's overall revenue to record a CAGR of 20% over FY25 to 27, primarily driven by a sharp scale up in manufacturing revenue and a 5% CAGR in ROH and spares. They project its EBITDA margin to remain strong at 25.9%, 27.4% and 27.6% for FY25, FY26 and FY27, fueled by the indigenization communication efforts taken by the management. Remember that recently Motilal Oswal has initiated a coverage on Hindustan Aeronautic with buy rating. Today they have maintained the buy rating with this target price of rupees 5,100, but stock is reacting negatively, down over 1.5%.
Okay, so that's the brokerage note on HAL. That's the reason why the stock is in focus. Let's move on and talk about Prestige Estates and positive news flow coming in for this company, because Prestige Hospitality Ventures, which is the hospitality arm of Prestige Estates, has filed preliminary documents with market regulator SEBI to launch its IPO to raise up to 2,700 crore rupees. The company has filed its draft red herring prospectus with the Securities and Exchange Board of India yesterday, and the IPO comprises of a fresh issue of equity shares of face value 5 rupees each, aggregating to 1,700 crores, and an offer for sale, which is an OFS of equity shares aggregating to the remaining 1,000 crore. Now, we understand that Prestige Estates, and they have informed the street as well, that a hospitality fundraising committee of the board has approved the participation in the offer for sale for its subsidiary, aggregating up to 1,000 crore rupees. So the offer for sale component is going to be provided for by the parent, which is Prestige Estates, and a 1,000 crore rupee worth of stake sale is what Prestige is going to be doing in its hospitality, like hotels subsidiaries. On the back of that, Prestige is down by about 2% as we speak. But Sahaj, coming to you, Prestige Estates is something that you've picked out on the charts as well, and what a massive correction the stock has seen, right from 2,000 levels. Now we are down to 1,270 levels. All of this in a span of, let's say, the last 6-8 months. Tell us, what's the outlook going ahead? Do you believe that now that this correction has settled in and the stock has come to its market fair value, what is the outlook going ahead?
So in fact, the entire real estate space, is looking attractive at this point of time, given the market setup and the way the markets are sustaining higher levels. And we believe real estate usually does land up contributing significantly when the market up move is healthy. So within that pack, we strongly believe Prestige Real Estates fundamentally as well as technically is extremely positively poised. Currently, it's given a good pullback and come to a support level of around 1250. At this point of time, we believe 1200 is expected to act as an extremely strong support level. Technically, 1380 is the target. Fundamentally, we would have a higher target for the same as well. So yes, the real estate pack is expected to participate, and Prestige seems to be the top pick in that entire pack.
Okay, so Prestige emerging as the top pick to Sahaj, and 1380 other levels on the upside to watch out for on Prestige. And coming to you, Power Grid is the stock you picked out for us. Tell us what's the news story.
The company has informed on commencement of commercial operation of 85 megawatt solar PV power plant in Ujjain, which is an MP, and this is actually established by the company through its wholly owned subsidiary Power Grid Energy Services. Also, if you see on chart, then the stock is actually gained around 20% from that April lows. Currently, it is trading about that 50 and 100 DMA, but from last 4 to 5 sessions, it has been hovering around that 200 DMA, and today it has actually touched that 200 DMA and gave a strong selling from that level as well. So this 200 DMA is around 235 level. Keep an eye on this level, and yes, the stock is trading in red today.
Okay, so despite positive news flow, stock in red right now. Let's move on, and as we slip into a very short break, we'll leave you with the word from Venugopal Gare, who we interacted with earlier. And broader India thesis is intact, with the Nifty expected to log 26,500 this year. That's the word coming in from Bernstein's Venugopal Gare. Let's go across and listen into his rationale as we slip into a very short break.
My broader thesis, to a large extent, interestingly remains intact even today. So what it means is that I still have a positive outlook on Nifty with a 26,500 target. The perspective is very simple, that macro for India, as I had indicated in January, had bottomed out. And more importantly, we are continuing to see some degree of improvements in macro. The second perspective was that I was actually expecting around 50 basis points of rate cuts, but that has already happened. And I do believe that, as you mentioned, uncertainty globally is actually good, because that could lead to more rate cuts. And more importantly, from a regulatory standpoint and RBI in terms of what they're doing to ease liquidity in the banking system as well, it's a very positive, in terms of how things would shape up through the year and early next year as well. The other important point is that both capital expenditure, which I was indicating, and consumption will be slightly better than last year. So, at the rate of change, of course, is going to be positive compared to what it was last year. But all these factors I've told you is not going to be so amazing that we can think of 25 or 30% returns from India. Beginning of the year, the way our sector weights worked were that we felt that domestic stories should have a higher weight, which essentially meant that I ended up having my highest overweights in the financial sector. I have overweight on telecom, and I ended up upgrading utilities to an overweight. So these were the three defining overweights for us. We had moved to an underweight in healthcare. Remember, that was a globally exposed sector. Now, after 3 months of underperformance, we are equal weightage healthcare. We had a marginal overweight on IT services beginning of the year. We actually cut down the weights quite a bit through the and we are now more equal weightish, but not underweight IT. We are still playing it with particular stocks. And this is the contours of sectors, right? But from a stock standpoint, if you look at India portfolio, hasn't really tweaked much in the last 4 months, but has recovery candidates, which we had sort of included in that portfolio. Something like Bharti was added to the portfolio and Adani Ports was added to the portfolio. So we had some consumption names like Avenue Supermarts, and we booked profits in Zomato, but got into Jubilant. So it was a very wide range of bottom-up selection on.
Hi there, welcome back to Market Fatafat. Let's just address the numbers that are flashing on the bottom of the screen. Maruti Suzuki Q4 numbers are out. Revenue has come in at 40,673 crores compared to 38,235 crores, an uptick of 6.4% year-on-year basis. We were expecting 40,948, so in line with our poll. EBITDA has come in at 4,264 crores compared to 4,685 this time last year. It's a miss versus our estimates of 4,911 crore rupees. Similarly for PAT as well, it's a miss compared to our poll. PAT has come in at 3,711 crores, which is down 4.3% year on year. We were expecting 3,800 crore rupees, so miss on that front as well. What's really putting some pressure on the stock right now is the margin. That's come in at 10.5% compared to 12.3% year on year. It's a big drop coming in year on year as well. We were estimating 12%, so big miss on that front as well. Revenue is in line. EBITDA and PAT have missed our expectations, and a bigger miss coming in on the margin front as well. Let's welcome on board Naveen Kulkarni, CIO at Axis Securities, to make better sense of the numbers and what he is making of these numbers as the first cut. Mr. Kulkarni, thanks so much for joining us. Good afternoon. Give us your first cut on Maruti Suzuki. Help us understand the numbers a little better.
Yeah, so clearly there is a miss on the margins. Primarily, I can see that we were expecting around 11.8% margins for the quarter. That at 10.5% looks to be a significant miss at this point in time. Important factor will be to understand the reasons for the miss. Is it because of higher marketing expense or higher discounting, so on and so forth, right? So those will be the critical numbers, or if there are any one-offs, right? So I think we'll have to look at that before making more sense into what actually has happened in the quarter.
Okay, and let's also welcome on board Shrishti, who's here with a better understanding of the numbers and the earnings fine print as she tracks the sector closely. Shrishti, take it away and help us make sense of Maruti Suzuki's Q4 numbers.
Well, yes, the numbers don't look that great when it comes to Maruti Suzuki, because there has been a big miss when it comes to the margin number, because the street was penciling in for the margin figure of close to 12%. Well, of course, there were factors associated on the back of, even we were highlighting that this time the other expense could actually go higher, which was seen to be hitting and jumping around 15% on a YOY basis. And this was of the back of the higher other expenses seen on the back of Auto Expo, as well as the new launches that the Maruti Suzuki has done in the quarter gone by. And along with that, the other factor that could have put pressure onto the margin figure was the higher depreciation on the back of commissioning of their Karkoda facility. Higher depreciation is what they have seen, but 12% was the street was expecting onto the margin figure, and around 10.4% is what the company has clocked in. So that's a big miss onto the margin figure of Maruti Suzuki. When we look at some of the other numbers, then though the revenue has come in almost in line to what we were expecting, but a marginal miss onto the profit figure is what we have seen. 3,711 crore is what the company has clocked in. So all in all, not a great set coming in for Maruti Suzuki, given the fact that the margin figure has been a big miss this time around. But well, of course, the management commentary on the outlook is the key to watch out for, how they see the margin picture shaping up going ahead. Back to you.
Okay, Shristi, thanks so much for running us through the earnings fine print for Maruti Q4. Naveen, I just want to come back to you on this point that Shristi was making. The margin compression has been much higher than what we were expecting. Tell us, help us make sense why this has happened, what could have weighed on the margins, and the stock is lower by only 0.5% right now, despite most of its metric being a miss versus estimates. Help us understand why this is happening.
Yeah, so two factors. One is there were, of course, launches, so higher marketing expense was expected in this quarter. So that could have resulted in the margins being lower. On the other hand, see, overall, Maruti's operating performance in terms of the number of vehicles sold, all those things have done pretty well in this quarter, right? So that is not a major challenge for the company. Also, the company is entering into a decent product cycle. So there are a lot of operating metrics-wise positives which are working for Maruti. But margin in one quarter, I think, could be because of higher operating expense or probably higher discounting. We have to figure that part out. But overall, I would say that the operating metrics for Maruti look to be quite okay at this point in time. So that's why the stock might not have reacted so much at this point in time. We'll have to wait and watch for the management's commentary to make more sense on is there a structural challenge on the margins or not? Is there a serious inventory build-up in the system because of which going ahead there will be higher discounting and probably margins are going to stay lower at these levels? So we'll have to wait and watch for those aspects. But otherwise, I would say that operating metrics-wise, valuation-wise, Maruti is quite okay.
Right. Hi Naveen, good afternoon. This is Shrishti also joining in. So what do you make out of it is that this 10.5% margin should be seen as a one-off, because on a YY basis and on a sequential basis there has been a decline, and one should look out for the management commentary rather.
Yeah, precisely. So I think we'll have to wait and watch for the management's commentary, because revenues are not such a major issue, right? And typically what happens with auto companies is that you already know the monthly numbers, know the average selling price for the car. So revenue numbers are typically well understood. So that, I think, from that perspective, operating metrics have been fine. Margin is the only variable which actually we come to understand from the results. There is a miss there, but I think we'll have to wait and watch in terms of what exactly has happened there to figure out more in terms of how it could pan out in the forthcoming quarters.
Okay, Naveen, thanks so much for joining us with your first cut on Maruti and helping us make better sense of these numbers. On that note, we'll let you go. But viewers, before we wrap it up on this edition of Market Fatafat, Fitch Ratings has said Adani Ports' acquisition of North Queensland Export Terminal is credit neutral but has positive strategic implications. The ratings agency believes it will support the port's majors' efforts towards international diversification, which is a key long-term growth goal for the company. The acquisition involves issuing new equity shares to the current shareholders of NQXT. Fitch expects APSEZ's financial stability to remain unaffected by this acquisition. But viewers, on that note, we're completely timed out on this edition of Market Fatafat. Thank you so much for watching.